Welcome to Bullish and Beyond. It's Beery the Bull. I'm your AI co-host. Join myself, Brian the MacMan, and JT Knows Things while we dive deep into the world of stocks, crypto, and how to live a bullish life. It's time to get bullish, and there's no better place to start than right here. Let's dive in.
Hey everyone, welcome back for another incredible episode of Bullish and Beyond. We are so bullish right now. The green ceiling is all over JT's Crypto Den. I am always green because I'm always bullish, but the market is also bullish right now. We are hitting crazy new highs. Apple just topped 4 trillion.
It's crazy.
And it joined the 4 trillion club with Microsoft and Nvidia. But then just within hours, Nvidia passed 5 trillion. As of this recording, it's at $5.1 trillion, up 4%. Absolutely wild. And there's so much good news happening with Nvidia. I keep preaching for people to research and look at it. I still hear from friends and family, they think it's, too high, but it keeps going higher. It is wild.
It does. It's insane. Those two names are like a third of our entire GDP. One third.
Is that wild? And most of the profit. Even more percent profit.
What is the profit on these now? I mean, people. What is so when you have family members say, you know what, dude, I think Nvidia is overvalued. I think AI is overplayed. Blah 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 blah. What is your argument for those folks? Because there's probably some listening.
They do have some good arguments. One of the arguments is they need to sell a stock that's doing well that they're gonna have to take a tax hit on to then get into a new stock. And I feel that. I don't like selling to take tax hits either. But I'm also thinking long term. And, in terms of my family, they already have some really good stocks that they're in. So it's hard to really argue if they're in, Tesla, Apple, and Meta and Amazon. Well, is Nvidia going to beat those? I do think so, but it's, also we don't know. I preach that Nvidia is the number one company in the world in the year 2030. And that is why my conviction is so high and I will keep putting money into it. I bought an Nvidia option a month ago and it's already up over 50%, but the option doesn't expire till 2027. And so I had this thing mentally. I was doing that if it was up 50%, I would sell it, which it is at this exact moment. But also it's also over a year away. I mean, wild.
Price targets, brother. You got to execute the strategy. Open up a new one. Be disciplined.
I should. It's yes. My 50%? Brother would probably yell at me too. It was up 60% this morning. Now it's up 52%.
Think about real quick, guys, Brian, what he's dealing with. If you are in an index fund, for you to make 50%, you are waiting approximately 2.5 years. And you did that in what time frame? 1
month. And it's also a long dated option. If I bought a short-term dated option, it'd be up 200, 300%. It doesn't expire till January of 27.
That's crazy.
Yeah, so I do have a problem pulling the trigger on some of my wins. That's one of my personal flaws that I need to work on and get some coaching on.
You're being greedy. I think for me, when I feel that way, this is what I do. You got to remember the story of a pig, right? A fat pig stays happy, but a hog gets slaughtered. It's when you get too greedy. It's true. Greed is okay. Too greedy is not good.
All right, so here's where I'm at. Full disclosure. If it was expiring in January of 26, I would have sold this morning. But the fact that it has over a year, I just think there's, I totally could close it out and buy another one. I feel like maybe the end of the year, possibly January, might be the time where it's up another 10 to 20%. And that option is up probably another 50 to 100% from where it's at.
I get it.
That's just my gut because I'm overly optimistic always. I think there's so much more good news to come out about Nvidia. It's like every single day there's another crazy news piece.
Yeah.
I mean, yesterday Jensen Huang, the CEO of Nvidia, he spoke at a conference in Washington, and he talked for about an hour and a half. And he went into everything they're doing, all their different product lines, partners, software packages. And one thing he said, which is one of the reasons I love Nvidia over the other chip companies, is the money is in the software. His chips are great, but someone else could make one, but no one can integrate the software that they've been doing for 20 years and optimize at this point. He says they have the strongest libraries in the world, and I believe him. He is on point. That integration, you are a software guy, so you know.
Software sticky. I mean, we've seen it, right? Like people that underestimated Netflix when, at first it was just a website that mailed you DVDs, then they're the first streaming service. Like that's all software. Like users get attached to it, developers get attached to it, and stakeholders get attached to it. If you run a 1,000-employee company and you're used to a specific KPI dashboard, I would love to see how they react if that was just different the next day.
They wouldn't like it.
They couldn't even find it. They're like, where is it? I'm used to seeing revenue here. They freak out. Software is sticky.
They would have to rewrite so much code to switch to another platform. And there's over I think he said there was 2 million some developers on CUDA, their software platform. And that is a lot of developers in the ecosystem.
It is.
So, I mean, there are other companies that are, getting big in the news. AMD, Oracle, Broadcom, they all have their sweet spots, but Nvidia still owns 90+% of the high-end AI chip market. Demand is multiple times over supply. There is no demand supply parity. Price is insane for these chips. Some of the stats he was showing, a single rack had 40 trays of chips or something like that.
Yeah.
And he said that in 1 second, the entire internet's bandwidth can pass through that one rack. That is how fast it is integrated. He shows the main chipset. There's not a single wire. It's everything connected for insane pass-through speeds.
That's interesting.
I mean, it is off the charts. He is building AI warehouses at a scale that is unprecedented, but the need is going to grow multifold. And one of the reasons is driverless cars. The other big one is robots.
Yeah, and if you're in either of those verticals or any vertical with AI as a developer, if you cut your teeth on CUDA, you're going to request to anyone that is paying for the hardware, or to even including your investors, VCs, literally any scenario, you're going to request CUDA compatible hardware, which is Nvidia. So, I mean, it's that network effect, that closed system that made Apple so successful.
Exactly.
Now, as a open source guy that preaches open source development, I hate it. But as an investor, it's a great strategy to corner the market. And both Apple and Nvidia have leveraged that tactic. And that's partly what I look for in crypto too, that network effect. It's part of my analysis.
I like that.
It's super, super big. If you can't show
You're using the word network effect, and I'm also going to throw the word moat. The moat around the business seemingly keeps growing. I mean, it's already enormous. But as you tack on more of these industries and it showcases what it can do, I mean, they were showcasing how their technology layers on top of like major warehouses. And they use Foxconn as an example. Foxconn is the number one manufacturer of all big tech like Apple. And they were showing the automation that it can do in these warehouses. And you have to have AI kind of constantly running and changing things to, perfect it. It was really cool kind of seeing this stuff in real time. And I encourage people to just pull up on YouTube and search for, Jensen Hung, Washington, and you'll see it happen yesterday.
Yeah.
Really sweet stuff there.
I couldn't help but listen and immediately draw almost a direct analogy to Ethereum. Like, the biggest move that we're seeing in crypto right now is all of these alternative layer ones. So like outside of Solana, but that would be one of them. So like Avalanche, Sui, Say, Aptos, they're all launching EVM compatible clients because what they're realizing is Ethereum's moat, its network effect, its layering of its technology
Yep.
basically means you're not going to be able to get user funds, users, or developers if they can't program in Ethereum's stack, Ethereum Virtual Machine, EVM, Solidity. If you can't provide that, they're not going to move over to the new layer one. And they
want it compatible.
All the functions and performance, and like they have certain needs that they want, but the cost is so prohibitive. The effort is so prohibitive to leave the EVM and to go somewhere else that you're starting from scratch. And it's the same as CUDA with the AI. You'd have to learn an entirely new stack to work with another hardware, and Jensen's really smart for building it that way. And Ethereum is smart for doing the same thing. They have tens of millions of developer wallets, smart contracts, like bigger than CUDA.
Wow.
And, they are eating the world. Like everything needs to be EVM compatible for you to get developers. And it's the same thing with the CUDA. I mean, software.
So that could continue for a long time on that Ethereum and could continue with CUDA. It's like if you already have the driverless car companies and robot companies spun up on CUDA, they're not just going to randomly switch because AMD is offering 20% off 1 year. It's the switching cost is
wouldn't do it.
Billions or something. Yeah.
Yeah. I mean, I could see a model almost, I don't know how they make this work, but with Verizon and the phones, you guys listening have probably also experienced this on a retail side. Going from Apple to Android or Android to Apple or AT&T to Verizon or, Verizon to T-Mobile, they offer to buy your phones, give you free phones. They do all this stuff because they know how prohibitive it is for you to shift. You need a new number. All of your information is going to be just, start from scratch. God, unless you actually know what you're doing with a SIM card and you know how to work with that. I mean, it's a technical problem for you.
There are apps out now to help you port it, but to your point, they have to give you so much to break that mental switching cost. Yeah. It's like, they're going to give you, a free iPhone 17 and give you $800 off your old one and blah, blah, blah. It's like, so that's the equivalent of, AMD saying, we're going to give you free chips for a warehouse and 2 free years of service. Like, that's not going to happen.
Yeah, it might move the needle though. Like that's what I'm saying.
Yeah, they might gain 5% market share if they did that, but they also would lose money at their next, share announcement.
Now here's 100%. Now here's an interesting strategy that you do see in crypto that could apply. So this network effect. If, for example, Jensen was to work with AMD and integrate their hardware, their GPU, all of their logic as an SDK inside of CUDA, that would allow people to port and to merge into CUDA using AMD protocols that they've written or procedures they've written. So in that scenario, Jensen could be like, I want 50% of your inference revenue, but I will add you to CUDA.
Interesting.
And Nvidia could just make mailbox money, similar to how you talked about the App Store with Apple. They get 30%.
I mean, it's like licensing Windows or something like that. It's
they could
figure out how to license it.
They could open it up, make it a process, and then have other hardware manufacturers join, where they get half the take for doing literally nothing. Or they can enjoy the hardware sales. I just envision at some point.
It's a good idea. I feel like everyone's really siloed right now, with their AI chipsets. The one thing Nvidia has done is their new NVLink that allows their GPUs to work with other CPUs. For instance, Intel, they made a huge investment in Intel that made waves recently. So they can have Intel CPU with their GPU stack. So, and they could use they could use AMD CPU, Broadcom, it doesn't matter.
I just thought about the games Jensen could play. So, he has so much money, right? So, knowing what that would do.
They have $5 trillion.
Right. Let's say he just puts 50 bill into AMD, gets all those shares. He owns 10, 12% of it. Sits at a few $100 billion. And
Yeah.
then he integrates and takes half of all their inference revenue. So Nvidia makes a boatload. And then also that announcement and subsequent revenue would also boost his holdings in that company. Like, this dude could play venture at the highest level.
I love it. The crazy
Like,
thing is, if he puts 50 billion in AMD or another company like that, he might make it back on the same day of the announcement.
Yeah.
I think he actually would. And the
Good.
case in point is, Jeff Bezos, when he had Amazon, buy up, what was it, Whole Foods.
Whole Foods.
And I think it was 13 billion or something like that. If I had to think about it, I think the stock went up like $15 billion instantaneously in the announcement. So the stock itself paid for the purchase without even considering the future cash flows, integrations, cost savings, and new business ideas. So if you have money, you have to invest money to get leverage on that. And when you're in the really big boy game, we're talking about, top 10 companies in the world here right now, they can just buy companies and invest at levels that, we can't. But at the same time, we can leverage our money into the right stock picks and the right arenas in crypto and everything else to see a nice gain.
Yeah, 100%. I think that was a good move by Amazon too. Distribution, automated groceries that are then autonomously delivered by drones or cars.
Yes.
They could take out Walmart. They see 600 billion market cap right there ready to be snatched.
I think Walmart's going to fight back though. They have distribution too. They're not as
that's true
tech savvy like in the consumer mind, I don't think. And then they're not going to be the first person probably to do the drone delivery, but they're probably not far behind. They have the assets and capital to make it happen. Speaking of drones, man, the robotics that they were showing on stage, Jensen had this presentation at one point where he had like all these robots like come out. Actually don't know if they were real. They weren't walking. Could have been an image. But it was super cool. And he had this like little Disney robot come out and play with them. The one that they're talking a lot about is Figure AI. And that robot's set to come out at a big level next year. So really cool to kind of see the amount of chips and inferencing that's happening with those. You have the computer inside of it, you have the computer in the cloud, and it's all interacting to make it happen. So that's why we're going to need these huge AI warehouses to help level up all these robots that are going to be popping in our homes next year. A different company, they frankly, they probably use Nvidia. I don't know them. They didn't talk about it yesterday. It's called Neo, and they're having their first bot, come out this next year. So you can actually pre-order it as of like last night, and it was around $20,000. So you can get a little house worker to come clean up when the kids go to school and after you go to bed and the house is a mess from dinner. I'm pretty intrigued. I don't know if they can get down on the ground and sweep up all these little things my kids drop and pick the crap out of the seats that they have in there. I'm really interested to find out.
I have two things. One, I would love to know the range and scope of what they can do.
Yes.
And then two, you have to remember that software is going to improve its function, just like the Tesla. As more robots get rolled out, it'll have more training data. They'll be able to upgrade the software and give that hardware more functionality, no different than the autonomous driving on Tesla. You didn't have to get a new car, right, for you to have fully autonomous driving now. My
car just did another update last night. It just every 3 or 4 weeks, it's like, hey, Brian, there's a new update. I'll take it.
Yeah. Whatever you did, I'm here for it.
Better driving.
Robot. Yeah,
I agree.
So
I haven't watched enough about this new robot yet, but they were showcasing that it comes with all these autonomous features built in. But it also said if you don't have the feature that you want, you can have some learning session with the executive trainers there, and they will train your robot then to do what you're asking it to do. And I'm sure that'll level up then, like you said, every other robot. So if I need something, if it hasn't figured out how to do a certain thing to help my kid, well, if I figured it out, then it'll know how to help everyone's next. But I'm like, can it clean up my whole house and clean the pool right before I get in it and wash my towels? Like, I'm pretty intrigued.
At 20 grand, that's a pretty good deal. I don't know what's the lifespan on them. Like 3, 5 years, 10 years.
I don't know. It's a good question. I think a few years. I think almost like anything else, though, like whatever comes out in 3 years will be so much better than it is now that even if it's working, it might just be like your secondary or tertiary, robot at that point. The next ones will just have, way better hand movements and stuff like that. Something I was reading about, Optimus 3 is coming out in Q1 of next year. Okay. And apparently that's going to be so much better than the current Optimus 2. And one of the main things is the hand. And not everyone is going to this length that Elon is about the hands. He is going at another level. There's like 26 different articulating pieces of his hands or something like that. Compared to some robots, they have decent hands, but it's not like a human hand. He wants Optimus's hand to be as good or better than a human. And I'm not sure that's this next version. Maybe we still have, Optimus 5 or something a few years out to get to. But that's the dilemma. I mean, if it can't put my dishes in the dishwasher and break one of every 5 dishes. It has to be almost as good as a human to pick up glass and move things around. And
yeah, I had a interesting physics teacher in college briefly, and he basically wanted us to do a math problem, which is so easy for you and I. But he gave the example. He's like, I'm going to put you on a golf cart, and your job is to stabilize this beverage. It's filled to the brim, and you have to keep it from spilling. And he's like, obviously, when you do it, like you can do it as a human.
Yeah,
you just innate, like no matter what you're doing, if your arm's not attached to anything, like, and you just hold this, you can focus and keep it level. Getting a machine to do that
subconsciously, even
yeah,
your body just
you're just like
just kind of hold it, right.
Yeah, it's simple. It's like it's not even ABC.
It's intuitive.
A 2-year-old, maybe a 4-year-old can do it with a little sippy cup. I've seen 4-year-olds just pour a whole jug of milk into it. So it's genuinely just the hands. And whatever we do, whatever connections we have throughout our forearms and our hands allow us to do the most complex things that machines cannot do. Like if you had to stabilize, you ever seen those stabilizing cameras? There's a reason why they look so insane. It is a lot of hardware.
They take a lot of battery. 100%. Like there's stabilizers for boats, but they run a crazy amount of battery to do it. It's a lot of power. And, some of these newer robots only last for a couple hours at a charge, which is, kind of an issue. And I think that might be one of the biggest things that we see in the future generations is, you want this bot to last, let's say, a full day. If I wanted the bot to come with me to Disney World and, carry my stuff and like do things for me, I can't just recharge it every other hour while I'm out. So I feel like right now they're almost more just confined to the home. I mean, if it can only, run for 2 hours, I don't know, maybe you could walk to the grocery store and come back or something like that. But it'd suck if your bot ran out of juice on the side of the road and it's just, holds up a red flag, come pick me up.
How crazy would that be? You start going to Kroger's and you start seeing just robots in there instead of the TaskRabbiters. Half my grocery store is TaskRabbiters, and I'm in like a small town in Ohio. And it's so... I don't see how 5 years from now you don't have something like a robot in there doing the same thing for people.
I mean, I'm paying Instacart to do it for me now, so I mean, why not just send my robot?
Right? Yeah, just walk, spend a few hours.
I would assume it could technically pick the stuff even better. I would program it that if it saw any imperfection on my fruit or vegetable, it would move on to the next one.
Yeah, and it can just stay there and look for 10 minutes.
No, I don't care if it picks them all up.
Right.
Once it comes back home with battery charge, I don't care if it's out for an extra 30 minutes.
It's a crazy world we live in, bro.
Or you take it in your car, and I'm doing an errand on in the store next to it. I'm at the wine shop, and it's at the grocery store.
Yeah, right. I think it's so cool that we're alive for this stuff. I'm worried. I am scared about it a little bit. I'm not a decel though. Like I think we should keep going down this path. It's just like humanity is going to look so different in the next decade. It's everything that I research and study with crypto how that's going to affect so many verticals. And then you have all of this stuff that you're investing in and researching that it's going to change a lot. I don't see how anyone has a job. I mean, 80% of corporate bloat at banks and financial institutions can be automated with AI and crypto. Like you don't
Yep.
need, you can have real time settlement. You don't need the DTCC. You don't need nobody. And even if you did need that stuff, like Chainlink and others can literally just route the data automatically. Like you don't need integration specialists. You don't need, you can automate all this stuff. And then you have the robots taking care of the physical world. Because there's a lot of people that sit in between just value. I mean, the example I just made a video on, at a bank, you need to get a loan. How many people, if you had to get a $10 million loan, how many people do you think are involved in that process? Humans.
15.
Right. Yeah, because you have done business at a high level. Most people are like, I don't know.
Was that a good guess?
It's a good guess. It's 11.
All right.
So loan officer, underwriter, you got the guy who actually sells these policies. You got the what were they called?
The big
They're
ones, the
that,
CFO or the president of the bank might have to sign off on them. You know, it's like
10 mil above. You start thinking about it. Aave just runs 40 billion with 0 employees. Like every single transaction that you do right now, like you don't need a human for on chain.
So if I submit my AI loan request, its AI accountant will look at it. Its AI loan officer will review it. Its AI president will say, all right, we're good. Sign off.
Yeah. I mean, eventually, right now, you just need the users. You just need someone that wants money and someone that has liquidity.
Yeah.
And then through crypto, they can work together, trust each other 100%, not even know one another, and provide loan terms all within 2 or 3 minutes.
I was about to say, how fast does that happen? If I submitted a loan request to borrow, 10 grand, I mean, is it literally someone fills it in like 30 seconds, a minute? Is it?
This is good. So on Aave specifically, you have 2 people. We'll call them Bob and Joe. Bob, he has ETH that he wants a loan on. Let's say he needs 10 million. So he's going to do 15 million of ETH. That's what he's got. And he wants 10 million bucks. On the other side, you have a guy that has 50 million of Tether or USDC just sitting there, and he wants to make yield on that stablecoin.
Yep.
Fair?
Sure.
So he'll write the terms that he is willing to loan out, and then when Aave takes that, he'll lock those terms up into a smart contract and spin up a treasury wallet, essentially, or an escrow wallet for that smart contract.
Okay.
Bob can now go scroll through Aave, find a loan that he likes, put the collateral up in the escrow, and get the liquidity in like a minute.
Interesting. That's super cool. So the person that has the cash is the first person that writes, or the Tether, and then they're writing the contract, whatever they want. Hey, they want 6%, 7%, annualized return, and then the user that wants it just goes and picks.
Yeah, like I want.
So it's supply and demand. If everyone wants to supply it at a certain price, you're going to get a great deal.
Yeah, like I want 70% LTV, 12%, 48 months. Whoever is willing to do that, give me your ETH, I'll run it.
Is it automatically filled? Like, am I, that 7% annualized example? Is it automatically sending my ETH to that person with the smart contract? You don't have to. It's like in the background. You don't have to do anything.
Yeah, you basically have a certain amount that needs to go into escrow. It'll be drawn against if you don't pay.
Okay.
And then if you don't pay enough times, it gets stripped.
Okay, so you do still send the payments. There is, the user is doing something. Yeah. Okay, and then if not, it falls back on the automation of the smart contract.
There you go. Yeah.
Okay.
That's the pretty cool thing about code. Yeah.
Is there any reason I should borrow money from a bank anymore, JT? I got on a serious note, like, am I getting better terms? Is there like a legitimate reason, or am I getting better terms if I went and, locked it up with some Tether contract?
Aave, you're going to pay more for crypto due to the nature of the asset class at the moment.
Okay.
Like if you have $15 million of ETH and you want to do the fun games that, we talk about on this channel, with leverage, like, getting a line on it or whatever, you can't go to a bank for that. So
You can
it's
put
more
that in
about-
Robinhood, though. I mean, you can't hold it in a random wallet, but if you put it in Robinhood, you can borrow against it, instantly on margin from there.
Maybe. It depends on the asset. I don't know if they
Yeah.
allow Ethereum. I know you can do it on Bitcoin on Coinbase, and they're
Okay.
on Ethereum, but the
Okay.
actual asset does matter.
Got it. I just
Right.
assumed, but I actually don't know that for
Yeah.
sure. But yeah, but in general, you could borrow against something in like a brokerage account as opposed to a generic wallet. You can't.
Yeah, and Coinbase is like right now launched. They've already launched that functionality. They can do Bitcoin 70% LTV at 9%. I think is where they're at. And
Wow,
they're
9%.
Yeah, that's actually really good. The private market is 12 to 14, like genuinely.
Interesting.
So it's actually well priced, and all of that's
It's kind of like mezzanine capital when you're looking at it from like a business standpoint. Normally just standard bank funds right now maybe around like 7%, something like that. But then if you're just trying to raise money in the mezzanine market, probably 10 to 12.
But the asset can go down or up 50% in a year. I mean, way more, actually, right? I mean, we've seen years where ETH is down 60%. And we've seen weeks where it's up 100%. So these are volatile assets.
I missed a 50% move in a couple months ago. So
yeah. I mean,
it is that crazy. So no, yeah, totally. I get it. Like, yeah, I mean, 9% leverage isn't much. If you're making 50% on top of that, then great.
Right.
That's the way I look at it too. A lot of people are scared to leverage some of their assets, and I'm not going for some huge amount. I'm not trying to lever to the hilt where I'm selling my stock on like a down day. But without the leverage, I mean, I'm calling it good debt that you're kind of missing out.
Yeah, I totally agree. I mean, I see it as a way. If I could summarize it simply for the viewer, it's like you have $1 billion, $100. It doesn't matter. If my cost for having that money is 6%, my cost of capital is 6, and where I put that money returns 12, I am making 6 for free.
Exactly.
So
free money.
It's just arbitraging, capital at the end of the day. If you're doing it with real estate, oil, crypto, it doesn't matter. I mean, my oil investment for people's education, I have this insurance policy. I'm able to take a $50K loan out of that insurance policy for free, put it into an oil investment that is returning a 118% preferred
cash flow.
Yeah, I mean,
and that's not to mention the tax benefits.
Correct, and the interest is 4.3% paid annually, one time. So it cost me $2,800 to go make 118%. So I was able to free up $50K for $2,800 to go make in my first year. It should be around $30,000. So
I like it.
That's just arbitraging investments. You can do that with real estate. You can do it with technology. I mean, if you took a line out, it cost you 6, and then you go make 10 in the market, you made 4 for free. It's the same thing. It's just arbing.
I mean, I'm paying around 7% for the money I borrow, and I'm averaging well over 20% annualized returns. So kind of a no-brainer.
Free money.
Free money.
As long as it goes up. And that's where the too greedy steps in.
Sure.
It's just got to be balanced, and everyone has a different risk threshold. Real estate guys, 70% levered seems to be conservative where I'm at. Like that would make me a little nervous personally.
That's stressful.
Yeah. Like I have $100 million, but actually it's only 30 million.
That's the nature of their business. It's either boom or bust.
Yeah. That's a lot of leverage. If those tenants stop paying, that could be expensive to hold on to. Very expensive. Like costing capital.
I have very short-term tenants, so if they didn't pay, they're gonna be out the next day. They're only staying for a week anyways.
Yeah, exactly. Yeah, I like Airbnbs a lot. That's a good one.
I'm already starting to look at, possibly getting my next one. I mean, some of the tax benefits are just insane. I'm looking to doing the cost segregation analysis right now. And just to give people a high level what that is, you're showcasing what the useful life is of not just the home, but all the things in the home, the electronics, the mechanics, the roof, the pool, whatever that different categories are. And they can depreciate them at different life cycles. So the standard depreciation model does a straight line depreciation of 27.5 years. So that means if you're doing an easy example, if your house costs $275,000, you would get $10,000 right off each year. But in the cost segregation model, you can say a lot of these things have a shorter useful life, and use a real firm for this. This is all, using a tax engineering firm. They do a full analysis, takes a few weeks. So of that $275,000 house, they might be able to depreciate like literally a third or a half of it in the first year. Yep. So you can write that all off. Instead of getting that $10,000, maybe you get $100,000 write off on year one. And you only had, $50,000 cash into it. So you're getting more write off than the cash you had. Has nothing even to do with the cash flow coming from it. And you could have borrowed that money from the down payment to begin with and only paying a nominal interest charge. And that is exactly how I'm leveraging my real estate. And I think I'm going to continue to do so.
Yeah, it's perfect. The only problem is it's like a drug you can't stop taking because you got to kick that can next year. So you need losses from next year's, earnings. You just got to.
So I'm gonna buy a new one every year.
Yeah, that's where I'm at with oil. I'm like, wait a minute. So I'm gonna make all this money, but I'm gonna.
Next year I'm gonna need to buy. Next year I got to buy some oil with you too. I mean,
let's do it, man. When we re-up, I'll throw you into that entity and we'll go buy oil together. That'd be fun.
I'm ready. If there's any other oil,
if
any big oil investors on this channel, we'd love to hear from you. Reach out to us. Super interesting market. And, JT and I have a few contacts in this space, but, certainly like to meet some more. Also, if anyone out there is doing algo trading, I'd love to hear about that. Something I've been researching a little bit lately. And there's so many out there. I think just the fact that I'm looking at them now, I'm seeing them every single time I open up my Facebook and everything else. And I don't want to assume that a lot of them are scams, but I think that there's a lot of potential, at least for scams. So very, very leery. Some of the setups are very weird on, having brokerages out of the country and limited power of attorney and just different things like that. I understand, why they have some of these business models, but, either they're taking a very high percentage on a monthly basis out of whatever profitability is generated, or you're paying a very high upfront fee. And some of these ones with high upfront fees say, money back guarantee for 30 days. And in 30 days, you're not going to know if this strategy works or not. If it makes 10 trades in 30 days, how are you even going to know? I mean, if you hired a broker for 30 days, you don't know if they're good. You need like a multi-year track record over here. And the back testing, I don't believe is as thorough or accurate as they make it seem. And that is one of my bigger concerns in general about the industry, is that I could probably back test some of my ideas and pick a certain period of time to make my returns look way greater than reality. 100%. And so I'm trying to bring down this stuff to reality and asking a lot of questions. And I'm just in the beginning innings of doing the research on stuff like this. So I'll keep talking about it on here as I found some good ones. I had a great call with a guy yesterday that has a super interesting algo out of New York, and they run it through TradeStation, for example. So there's a back end between their business and TradeStation that puts the trades through, and you're putting your own capital in there. They don't have access to it, and you can pull it or adjust it at any certain time. But man, it's crazy. They're showing 1% average gain per day.
Yeah, I mean that is crazy. I generally have a position that if you can do this and you can do those kinds of returns, you only need to raise $1 million in 5 years till you retire everyone that you love and care about. Like, why are you peddling it? Like when people tout these crazy returns, honestly, you can, if you doubled your money, this is math that's important. If you double your money 9 times starting at $1,000, you have $1 million plus dollars. 9 doubles. At 1% a day, you're doubling every quarter. On $1,000 in 2 years, you got $1 million. You don't need a
It
lot
is
of money.
that wild. Did you throw 50 grand in one of these accounts? If it actually worked.
Yeah, so it's like, but why would you raise money for something if you could actually do this? Why would you even go through the trouble?
Their
That's
theory
my
is
that's
that they're going to take, a large chunk of the profits. So, they're 20, 30, 40% that they're asking for of the profits that are automatically, siphoned off. So that's one of the reasons it won't compound as fast. 'Cause each month you're giving back, this large percentage. It still obviously grows, and faster than any other, random
I
investment you
guess
could
to
have.
de-risk
But
your capital. I guess that'd be the only reason. De-risk your capital. I know that some of the best, most successful funds are quant funds. Really, the Centurion Fund, the Medallion Fund. These guys, they have had models that have been running very long, way before AI is mainstream, and they consistently beat the S&P 500. They are anomalies, so it is possible. They
yeah,
are real. But like you said, it's also in that industry, since there's not a human really responsible for your money. Ultimately, I mean, there's a name on the docs, but the actual trades, the decisions, the
yeah,
stuff that I do, the stuff that you do with your portfolio, no one's on the hook. It's a model, and like it either works or it doesn't. So people can cop out, people can disclose their way out of a bad situation, and it would make it ripe for fraud. So I mean, my flag's always in the air, but I do know it's real.
my flag was high too. I mean,
Yeah,
the guy yesterday couldn't explain everything. He's one of the founders, but he's not maybe as technical. But that also, had some concerns for me. His next call, he said, and get me on with the CTO after I sign his NDA. And I'm intrigued enough to go to the next step. I mean, it sounds really
yeah,
good, and it's one of the more legit ones that I found on my first round of research here. But I can see algos. I mean, if you have the right algo and it actually works, it could be insane for the future. I
right.
mean, we could maybe beat them too, but we got to make some really good picks. I like the idea of controlling my own destiny, though. And days like today, I mean, there's no way the algo's beating me. I mean, I'm up 3% today. Like,
Yeah,
good luck. But I also have down days, and suppose the algo doesn't have many down days, so
right.
remains to be seen.
It does. Most of that stuff's volatility. It'd be a good hedge against your long strategy for the
I was kind of
downside.
thinking that too. Yeah, it'd be like buying another investment class that I just don't have yet.
I'm thinking the same thing with liquidity pools, putting my cash in a liquidity pool. A good, legit liquidity pool can spit off 2 to 4% a month, depending on what their take is. And that's cash flow, that's distributions. So, and it's really just
How do you use a liquidity pool? Will you explain that?
so similar to Aave. Instead of doing loans, you basically deposit back to Bob and Joe, right? Joe has he has 15 million stable coins. If you go to a operator, or you could set it up yourself with 15 mil, it's up to you, but you can spin up your own liquidity pool, put stable coins in there, and then all of the different exchanges and apps and everything else will use those stable coins to fulfill order books.
Okay,
And they are basically micro loans, if you will. Like, okay, I'm going to take 1,000 here, da 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 da. Okay, I just fulfilled another order that fills that plus the fee, so I got 1,100 back. I'm being quick, and it probably more like
sure.
1020 back. Boom, and that can happen a million times in a month. Like, it's
Okay.
connected to all of the different endpoints that consumers are putting requests in for, and you can be a
Can you
liquidity provider.
pull the cash back at any time?
It
Is it that
depends if
liquid,
you
like a money
if,
market, or no?
if you have autonomy over it. Yes, it's like you could set the term for 7 days.
Okay.
Um, Most operators, so if you go to a fund like me and what they're doing, it'll be a 6 month lockup. And they'll
Okay.
probably take 20 to 30%. And then you just get a check, probably distributed every week. Just boop boop, just stable coins dropped in your wallet, and
Interesting.
then you can make a redemption request and get your initial capital back, which should be your principal. So it's like you get your principal back after 6 months, and at
Yeah.
the time it was used to make these distributions. So if you put a mil in 6 months later, you could have 1.15 million in stable coins.
Yeah.
That's pretty good. Or maybe more.
Interesting.
6 months, you might have
Could be a
1.4.
great return.
Yeah, it's a great strategy. And I had the same thought. It's like that is as long as people are
You might as
selling more,
well. I mean, if it's risk free?
it depends. Like if I would only invest in USDC, Uniswap V3 or V4. That's it. Like it needs to be that specific thing, and it needs to be Ethereum. I'm not taking any liquidity pools to, Solana or XRP or Hedera. They're not developed. When you have tens of millions of users and developers, like 100%. And,
Yeah.
it benefits from volatility. So in bear markets, I'm still getting that return.
Yep.
In fact, it would probably go up with the volatility. As volatility goes up, it does pay
Higher
more
borrowing cost.
That and the volume. Like liquidity pools make money on volume. It's about number of times that liquidity is used. So when volatility is high, you have more trades. And it's just the
Interesting, yeah.
volume of trades where you make your money. It doesn't really matter which way it's going.
It's a good hedge.
I think so, yeah. And I think that's why quants exist.
Okay.
It's a way for you to capitalize on vol.
Okay.
So when you have a long position, you could allocate into a
Yeah.
negatively correlated asset class like quants and decrease the beta of your portfolio. That's why they exist.
Well, speaking of volatility, I'm expecting some big volatility tomorrow after hours for Apple. They have their quarterly earnings announcement. And from my checks and what I'm seeing in the market, we're going to have a major beat on iPhone sales, which is already 50% of their revenue. So having a 10% beat or something like that. I mean, the numbers I'm seeing are probably around 15 to 20% more iPhones sold and compared to the iPhone 16 the year before. But you also don't have a full quarter of sales. So maybe you get a 10% lift on what expectations are. And if that's half of the revenue, that would mean a 5% beat on revenue just for that category, let alone all the services that come with it. They had a new Mac release recently. They had back to school happening. I could see the Mac also being a nice beat, 10% or something like that, perhaps. So those combined, I think, could give the stock an insane lift. And sometimes they have one of the years they had the highest earnings and highest revenue in company history, and somehow the stock went down the next day. So they also the guidance does matter, and there is the sell the news. But if they come out and have those beats, and then they also say the guidance is looking really good, we're increasing our annual guidance because of the iPhone expectations, that will make the stock explode on Friday morning.
And you need that. Just like I needed ETH. Like I really needed ETH to do well. It was a big weight.
Apple is an all-time high. I mean, broke 4 trillion today, like we said. So that's why I got my Apple shirt on.
About it. Of course.
I mean, there were some times that,
but it was underperforming.
Yeah.
Like
it was.
Yeah, I remember talking
for how much cash it's it's spinning off 25 billion free cash flow a quarter. It is absurd.
That is absurd.
Dude, the next couple of years they're going to break over $500 billion in sales. Like, dude, they are insane. And like that's Walmart is in that category, but they also have, margins that are only a couple percent compared to Apple's margin. It's in the 40% range. I mean, they are crushing it. But Nvidia is in the 80% margin range. They have less sales, but now Nvidia is also making over $20 billion a quarter in free cash flow. Nuts.
I mean, what else would you invest in? I mean, really?
You got to buy more companies. I mean, they just made an investment in Nokia. They said they're building some custom chip that uses AI to figure out how to, do the network and stuff like that for the best, cell signal and everything else. They made some oil and gas investment to have, more energy. They're investing in these robotics companies. So, I mean, they're just investing in the future. And I think that, overall in this podcast, I hope people understand that I am investing in the future of stocks and you are investing in the future of crypto. And everything that's old, great for them. I mean, there was obviously a time for that company or stock, but I'm over it. I have no interest. If you are not skidding to the future at a very fast pace, you will be left behind in a cloud of rocket smoke. So get on it.
100%. That was a good one to end it on. Apple, your baby.
I love it. Well, when this episode comes out, everyone's already going to know what happened. I am going to predict a 5% move to the upside on Friday.
Let's see.
If that happens, I will be all smiles in the next episode, everyone.
Let's do it. I'm excited about it.
I love it. Yeah, keep watching these hot flying stocks. Nvidia and Apple leading the charge. Nvidia now in the 5T club. It's not too late, everyone. Keep checking it out. Stay bullish. Hope you enjoyed this episode of Bullish and Beyond. Cheers.
Until next time, y'all. See ya.
Bulls. That's a wrap on today's episode of Bullish and Beyond. Remember, the market never sleeps and neither should your ambitions. Whether it's stocks, crypto, or just leveling up in life, stay focused, stay bullish, and keep charging forward. Keep your energy high and your mindset bullish. This is Beery the Bull, your AI co-host, Brian the Mac Man, and JT Knows Things signing off. All content published by Bullish and Beyond, LLC reflects personal opinions only and is provided for informational purposes. Please conduct your own research and discuss with your accountant and/or financial advisor before making any financial decisions. The information presented should not be taken as financial advice. We are not financial advisors. Nothing you hear, see, or read in our content should be considered as any form of financial, investment, or legal advice, or a solicitation to buy or sell any assets, or to make any financial decisions.